Federal Reserve cut rates. You had the ECB holding rates, Bank of England holding rates, South Africa cutting, Ghana cutting. Yep, there they are. Pretty notable actions from the central banks. I'm going to be looking forward to Nigeria coming up next, where the central bank is set to meet next week. Analysts are saying the decision is going to be crucial for sustaining disinflation while balancing growth pressures. Markets, of course, remain alert on how these moves will shape Africa's economic outlook. And inflation, of course, decelerating in Nigeria 5 straight months now, April through August. We have, of course, happy to have the co-managing partner at Comerico Partners, Mr. Steve Osho. Welcome, sir. Thanks for having you coming on the show with us. Commercial.
I got you again.
I have to get it correct. I'm gonna nail that. I'm gonna have to repeat it every morning when I wake up. How are you doing?
I'm good.
What's your take on the Federal Reserve and the rate cuts that we saw in the U.S.? Was it all politics, or was it more about economic fundamentals?
I think for me, it's a cocktail of both.
Yeah.
Politics and policy.
Yeah.
So I would say politics in terms of, you've seen how Trump has been hammering the Fed chair in terms of how they need to cut rates.
Yeah.
He was looking for more of 1% cut in interest rate. And we've seen that the Fed has been playing because of policies and data. And I think that's what played out at the last Fed meeting as well. They're still concerned about some of the development that are seen in the market. They're still worried about the price pressure, and they're still worried about the job, growth and all of that. So that's has shifted their plan, their mentality in terms of what they needed to do. They all agree that they were supposed to drop rate or cut rate, and that was the reason why they did the 25 basis point that they did. But the challenge there is, how much of that are we going to see from now to the end of the year? And I think you see that from the mandate that the Fed chairman actually mentioned when he was doing question and answer. He mentioned on that the mandate is shifting to just making sure that there's price stability and massive job employment.
Yeah.
So when they see that job growth, I think it's going to determine quite a lot of things, where how many cuts they're going to have from now to the end of the year and how aggressive they will be.
Yeah. Now, I want to ask you about, I guess, interest rate differentials, right? If you have the Fed cutting and what that means for emerging markets, particularly in the African, because we did see South Africa cut, holds, and Ghana cutting, and then what this means, Nigeria, what do you think the impact is going to be?
I think there's a lot of interconnectivity between what happened in the advanced economy and what happened in the emerging and emerging market generally. The reason is because when the dollar weakens, it creates a bit of room for less pressure on the local currency.
Right.
And there's a bit of symmetric and systemic issue that you have to look at as well, that connect whatever happens in US or in advanced economy to what happened in the emerging market. The reason is because some of the decisions that will be taken from these other economies will depend on the local central banks, what they are looking at, and the kind of shocks that they have to address.
Yeah.
But generally, because we've seen Fed cut rates on the back of what we've seen from the ECB, Bank of England, and all of that, it means that some of the emerging markets will actually look at how that fits through into their own economy.
Yes.
And because there's going to be a lot of global impact in terms of the channeling of resources of finance or investment to these emerging markets because of high yielding environment that they have, and if Fed start cutting rate, people have to look for some other destination for investment. And what it means is that you're going to see a lot of capital flow into these other other emerging markets. And what you've seen globally, again, if you look at the history, anytime that happens, you see huge amounts of borrowing coming from the international capital market. I think the last time we saw these waves of interest rate cuts from the Fed, over about 8.2 or 8.3 billion was raised from the international capital market. So we're going to see that a lot as well. Then we're going to see a lot of capital flow, probably into FDI and FPI in some of these destinations. And from statistics that I've seen again as well, you've seen that anytime this kind of thing happens, especially in emerging markets, you see a lot of capital flow that actually could double the GDP of that country within the period of time. Especially the ones that have actually sorted out their, structural issues, monetary policy issues, plus the fiscal harmony between the fiscal authority and monetary policy authority.
They need that money. We need that money, and we're hoping that commercial will be handling it as it comes in.
We're here for you.
South Africa holding rates, Ghana cutting. I mean, what have you made of some of the decisions on the African side?
I think for South Africa, if you look at what they've done this year alone, I think they've cut rate about 3 times.
Yeah.
So what the South African Reserve Bank is looking at now is we need to look at what we have done for the past 3 consecutive MPC. How does the effect of that feed into the economy? I think that's what they're looking at. I think they've seen a bit of GDP growth projection, better than what they actually projected in the last MPC in July. I think they're looking at about 1.9 projection from about 0.9 in July. So which means that the economy is doing well, but we have to look at all the transitory effect of what we have done before and how that will play out. And in terms of the inflation number is still slightly above what their target rate is all about. But they believe that before the end of this year, their 3% target will actually be anchored. I think it's around 3.4 right now.
Right.
So all these issues are what they consider why they actually had the rate. So I will say that they've been aggressive for some time in terms of interest rate cuts, and they're trying to see how this will pan out into the rest of the year and how the economy actually flow through. So for Ghana, I think Ghana was a bit aggressive, which because 350 basis points is actually is a lot, from 25 to 21.5 thereabout. So, but I think the reason that the monetary policy committee actually mentioned was basically on the fact that they've seen a lot of activities in the economy. They've seen a lot of international trade. The Ghanaian cedi has been appreciating, less pressure. They've seen a lot of improvement in services and agricultural sector, and they've seen a lot of activities in industrial production as well and consumption. So that has given them a lot of, how will I put it now, it's given them a lot of confidence that the economy is doing well. And I think from the inflationary target to the GDP growth compared to what they have in the second quarter for 2024, you've seen a lot of improvement as well. So that combined together actually giving them the impetus to say, you know what, at this point, let's be aggressive. Because 350 basis points is huge.
Really big. Look, you know what I want for Christmas? Maybe you guys should do this. I just want a dashboard that gives us access to all African markets, because there's just so many interesting things happening.
We actually have that.
You do?
Yeah, we have that.
Access to...
that means you don't read Commercial Partners news.
I get your newsletter. I get your the market updates and so on and so forth.
So we have, because what we try to do is to cover all emerging market plus US. Right? And what we do is to put all those things together to be able to give you a lot of information and data if you want to invest or if you want to have just for knowledge. Yeah, we do a lot of that.
Okay, you know what? We're going to talk. Let's get to Nigeria now.
Okay.
Home turf for us. What do you expect? I mean, inflation has been coming, slowing. So what do you think MPC is going to do? Although Cardoso sounds very cautious. Like he really wants to focus on the data and before he makes a move. But what do you think?
I think
and that's Governor Cardoso for everybody watching.
Governor Cardoso is actually sounding more like the Fed chairman. If you look at the rhetorics and all the information that's been coming from him, I think he's looking more at the data that is coming through, and he's looking at how does this data affect our decision making. And at the same time, they don't want to spook the market in terms of what they've achieved, because if you look at the movements of the exchange rate, naira to dollar, from the beginning of this year till now, you see that they've done a lot of job in that area. We've seen massive appreciation in that area. I think as of today now, dollar is trading below 1,005. Benchmark that a lot of people have, they call psychological mindset for the dollar naira. So I think they're going to be looking at that. They're going to be looking at the inflation numbers. though inflation number has been dropping, I think for 3 consecutive times, and we've actually seen that at 20.1 there. They're going to be looking at those numbers as well, and it's a bit tricky in terms of should they drop rate now, should they cut rate now, should they leave it on hold?
Yeah.
And I think the market consensus is actually divided in terms of what would happen. A lot of people are saying that probably might see 25 basis point to 50 basis point cuts at the next MPC. A lot of people are saying that they'll probably hold. The jury is out there, so I don't know what's going to happen, definitely. But again, I think they are going to look at achievement they've made so far and not to try as much as possible to spook and put a spanner in the rails of what you've achieved, especially when it comes to exchange rate. Because what happens is that if you drop rates sharply, even though the Fed is dropping rate, gradually, the flow of currency of fund or investment that you expect to come to your FPI or FDI probably might slow down. And they probably might look at other destinations in Africa or emerging market that can give them better returns in yield than what you have. So you need that delicate balance to be able to achieve this.
Steve Osho, I thank you for taking us around the world, from the US over to the other markets in Africa, looking at central bank decisions and resting here in Nigeria to see what happens. We appreciate it. Co-managing partner, Commercio Partners.
Yes.
Mr. Steve Osho, I got it. And we don't have to talk about me getting that access to all these markets thanks to your platform. Thank you so much for your time. We appreciate it.